Hey everyone, it's Andrew here. So my friend bought the Oculus VR headset and I tried it for the first time, and I'm sure I had a similar experience to most people, and I was immediately impressed. It's actually pretty epic. I was fully immersed in the world and could see its potential almost immediately. My friend was using it and saying that he is going to go out and buy more Facebook shares just because the product is so good. And I think it's a pretty interesting idea as well. And it's a pretty interesting world that Facebook are leading the way in at the moment. And I feel pretty good about VR being the future. So I thought I'd dive back into Facebook and take a look at a valuation again. Now, I used to be a shareholder in Facebook until about a year ago when I thought the valuation had gotten a little rich and I wanted to invest in NASPA's. On paper, that decision hasn't really made a big difference. I'd be down quite significantly whether I kept the Facebook shares or not. Anyway, I'm going to do an updated valuation today on Facebook, or now it's called Meta, and see approximately where I think intrinsic value is in my eyes right now. And before I start, I recommend Interactive Brokers as the best and safest broker to use for your investing. There's a link in the description if you want to take a demo account for a spin and see how it works. I have demo videos here on my channel as well. I also have an e-magazine that I put out once a month where I share my thoughts on the market, plus I give my watch list and my updated intrinsic values. There's a link in the description as well. And if you do like this video, give the video a like and subscribe because it definitely helps me out. So I think the best thing to do first is to go through their earnings presentation for the most recent quarter, just to get a feel for what's been going on recently. And look, I think a lot of us know what's going on recently with quite a decline in the advertising revenue. As you can see here, it's gone from 32 billion down to 26 billion just in the quarter. Now, that is still above where it was in Q1 2021. So it has come back down off its high from Q4, but year over year, it's about flat. It's actually up a little bit year over year. So look, it's not in free fall or anything crazy like that. If we look at this is revenue again. So revenue had been growing really nicely quarter on quarter until the most recent decline. And that's probably what sent the share price plummeting. Well, I'm pretty sure that's what it is anyway. Okay, let's go a little bit further. Expenses as a percentage of revenue. Looks like they have now, even though revenue has declined, expenses have gone up. So that's another reason why. So that net income is going to be hurt here because the margins have obviously contracted. Here we go. Here's net income in billions. It's actually, in millions, but it's gone from 10 billion down to 7. And there we go. That's a 25% decline, and hence the share price getting punished. Diluted earnings per share, similar story. Capital expenditures. Now this is where I think this is interesting because they have started spending. Well, they've spent an extra $5 billion in the previous year, and I think that's interesting because the commentary around this is that they're spending all this money on VR, and this is where a lot of their money is going. So I would call that growth capital expenditure, not maintenance capital expenditure. I think we get to, when we talk about free cash flow a little later, I think we'll get into that in a bit more detail. Okay, here's daily active people, family daily active people. Don't quite know why they call it out as family daily active people, but anyway. It's still on the steady incline. It's already penetrated half the world. So monthly active people, it's still inclining, which is good. Average revenue per person, that's gone down. Okay, that's with, I assume this has got a lot to do with the iOS updates. It's got a lot to do with people not spending as much money on advertising anymore. And the world has gone through quite a weird couple of years. And I don't know. It's pretty hard to work out the stuff in the short term, but anyway, you can see that the fundamentals of this business, like daily active users, is still on the same trajectory. So look, I don't know. There doesn't seem to be a whole lot wrong with this business at all at first glance. I want free cash flow. Here we go. Here's free cash flow. So we've got okay. So that's down in line with what happened with the net income, down about that 30% kind of mark from Q4, but year over year, Q1 2021, it was 7.8, now it's 8.5. So free cash flow has actually gone up since a year ago. So even though they've been probably spending a lot more money, it says purchases of property and equipment, it has gone up. Okay. So look, free cash flow is pretty solid, and that's going to be really helpful when we look at the valuations. I'm going to call growth rates here. They're slow, and then, I don't know what's going to happen over the short term, but I think over a 5-year period, you could feel pretty confident that this is going to steadily incline with those monthly active and daily active user growth numbers. They're steadily inclining as well. So I quickly wanted to just check that the shares outstanding number hasn't been going up dramatically, and it hasn't. It's gone from 2.9, something around that, 2.9 to 2.8. So it's actually been, they've been buying back some shares, which is good to see. So that's all I really needed to see there. And in the balance sheet, I wanted to have a look down at net debt, and that's a negative number, which means they've got more cash than debt. So they've got $30 billion sitting in cash after they paid out their debt. So then the next thing I want to do is I'm looking at Dataroma here, and I'm looking at all the other people, all the other famous investors of the world that have got investments in Facebook, and this is the most popular of the Dataroma stocks that super investors like to buy. So like Rob Vinal, Lee Lu, Michael Burry's just bought in the most recent quarter, and that's a big piece of the portfolio now, 10%. David Tepper, we could go on, Stephen Mandel, Terry Smith. Look, there's pretty much everyone is involved here. It has invested into Facebook. Everyone probably, but Berkshire Hathaway. That's about the only one I see that's missing here, Warren Buffett. But besides Warren Buffett, I think everyone else is on board here with some sort of investment into Facebook. And then when I look at a valuation, so I'm going to use really slow growth rates here. I'm just trying to get a feel for what I think the intrinsic value is right now. So this is not what I would buy it at. This is what I think it's actually probably about worth per share at the moment. So I've got the free cash flow number. I've just extrapolated that out over four quarters. My growth rates, I think, look, this is just being really conservative. I think maybe they're flat for a couple of years, and maybe the Oculus starts to grow a little bit, and their business, because daily active users are still growing, maybe the business is going to just be pretty boring and grow at 5% from here on. And that would give us a fair price of around about, I think about $200, let's call it. And that's around about what the stock price is as the day that I'm recording this in June. So look, if you're more positive about this business, maybe you see growth rate starting to pick up back to levels that it was over the previous decade. Maybe it gets up to, say, 15% later in the decade, and that Oculus really starts to take off, and there's a lot of growth there. Maybe it turns into something like the App Store that Apple have, and all these software developers are making all this content and making all this money, and Facebook getting a big cut of that, and they own the platform and all that type of stuff. All the bullish side of things. Let's call it 15%. And now we're talking that its fair value is probably today at more like 260, pushing, we could even be really, really bullish and call it 300. So look, buying it today, if you're really positive on Facebook, is good buying by the looks of things. You're probably looking at about a 15% return with a little margin of safety in there. I would assume this multiple is going to expand as well. So look, as you can see, I'm just playing around here with the numbers, and it's probably close to today's value at the moment. And we're looking at, if you're bullish on this company, it's probably pretty good buying, and you're probably going to get a 15% per annum return here, which is significantly market beating. And for a company like Facebook that's so rock solid, well, it's a pretty safe bet. So I think this is a very safe investment, and honestly, I can't see a serious downside or loss of capital going on with this investment. And Zuckerberg would have to screw things up pretty badly, and I don't think that Oculus is that bad of an investment. Even if VR doesn't play out amazingly well, this is still a pretty great business, integral to most of our daily lives. So I think for those like my friend who are really into VR and super confident in its future, well, that's fine, and an investment in Facebook shouldn't backfire badly on you. I hope you've enjoyed this video. Thanks for staying to the end, and I'll see you in the next one.